Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
A publicly owned money management company, along with a top chip maker, featured in this go-around of top stock picks with our panelists, Nina Mishra and Brian Hamilton. So, Nina, we're going to start with you. You've got that publicly owned investment management company, Blackrock.
Yes, Blackrock is the world's largest asset manager. They have more than $6 trillion in assets under management.
Wow.
Obviously, the company has been benefiting a lot from rising stock markets and increasing consumer investor preference for ETFs. They have iShares brand of ETFs.
Okay.
The company reported last week, beating on both the top and bottom lines. And if you go to the detailed estimates page, you can see that analysts love the results. They have been increasing estimates for the current year and the next year for this company. What was notable in the report is they got total net inflows of more than $367 billion for the year 2017, which means that they were receiving more than $1 billion of new cash every day last year.
Wow.
Of course, most of this money went into iShares ETFs. As I had mentioned, the ETFs are very popular. And we have talked in our ETF videos many times that the ETF industry is very top heavy.
Yes.
The top three providers, BlackRock, Vanguard, and State Street Spiders, they control more than 70% of industry assets. And because of these massive amounts of assets under management, they are able to aggressively cut their fees. And investors just love cheap ETFs.
Sure.
So that's why most of the new money goes into these large cheap ETFs, and it is very difficult for newer entrants to compete with these industry leaders. BlackRock has also been expanding in Europe and in high-growth countries like China.
They're making some acquisitions, too.
Yes,
right?
yes, yeah.
Globally.
Yes, to expand their global footprint. Another reason why I like this company is that they have been returning a lot of cash to shareholders. Last year, in 2017, they returned $2.8 billion to their shareholders. And last week, they also announced a 15% increase in their dividend payout, which at the current share price, that dividend payout would mean a dividend yield exceeding 2%. It's a Zacks rank #1 stock, and with a dividend yield at around 2%, I think it's definitely worth a look.
And the shares,
excellent growth opportunities as well.
The shares have outperformed the industry in the past 6 months, too, so that's another added bit of frosting on that cake.
Sure.
All right, Brian, you've got Intel. Something interesting happened with your company stock not too long ago.
Yeah, it got beat up a bit when a report came out that there was a design flaw within all their chips for like the past 10 years.
Yeah.
Well, this turned out not to be true. It wasn't a design flaw at all. It was actually fixed with a couple patches and updates. And analysts actually looked at this as more of a PR issue rather than a chip flaw issue. So it's not expected to impact either the top or bottom line. But the stock price saw several consecutive days of big drops. I want to show you, throw a quick eye here to show you how it really impacted. If we looked at the estimate revisions area here, down over the last 7 or 30 days. Not a single one. So this is not going to be impacting the top or bottom line in the future quarter or the coming fiscal years. But what has been really interesting, I don't know if you guys really watched the Consumer Electronics Show, Intel came out and they showed a bunch of new awesome technologies because the company's really shifting away from being that old school PC company and going into this data-centric, and we're looking at autonomous driving, artificial intelligence, supercomputing, more data centers, enterprise aspects of it. But the two ones that I really liked out of the show were their new virtual reality which they're going to be utilizing up in the Seoul Winter Olympics and in the NFL playoffs. And it's actually going to, you know, when you see somebody downhill skiing, you can actually move the whole camera around. You can see from every angle, top, about 360 degrees, which is a really cool way to kind of view it. But another way that they're utilizing their VR is in the movie industry. They're really trying to get the movie industry to have people who can wear the VR, but then the audience member can actually pick which particular viewpoint or which character they want to see the movie from. So they can see a movie 10 times in 10 different perspectives. So it's going to be really good for the consumer and also the movie industry.
You know, Sharon Stone just completed a project for Netflix in that very vein.
Yeah.
Where they film, you know,
there's a couple movies that come out, but they have to have the visuals from each person, so it's a little more difficult for the movie industry.
Yeah.
But if you look at the consumer going out and going, hey, I'm going to see this movie 7 times, or I'm going to see it instead of just one time, well, then it's worth the value for these movies to actually start shooting in this perspective.
Yeah.
The other really cool thing was their quantum computing. They showed up their superconducting quantum test chip. Now, this is going to be the early stages of quantum computing, which is going to really process information at such a higher, more efficient rate than our current computers. This is going to be used to find new materials, new drugs, and more specifically for artificial intelligence. Now, this is just another way of looking at how Intel is going. We're not looking at PCs anymore, we're looking at this data, and we're looking at the future of the company going forward. Now, the company also pays a really solid 2.52% annual dividend, and I also want to show you their price and consensus graph here. As you can see, there. We have this dip that, you know, we were talking about from the issues going, you know, the thought was a design flaw. Well, these are really nice buying opportunities. We still have our year-over-year increases in annual estimates giving us our nice growth story. So Intel currently is a hold right now because of the worries that the price was going down a bit, but it looks like a really solid long-term high dividend paying company for the next couple of years.
Okay. As long as you're still confident.
Oh, yes.
We'll take your word. Do either of you own either of these?
I don't.
I have Intel in my income investor portfolio.
Okay. Well, thanks for that. And don't forget, there's always more stock information on our website, Zacks.com. Articles written by these folks, as well as other commentary, top stock picks, and stock picking strategies. So get over to the homepage and start going through it all with Nina and Brian. I'm Terry Ruffalo.